Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linden Associates with your agriculture update for this Tuesday, the 10th of October, 2017, about 3:50 p.m. Central Daylight Time. A down day in the grain markets with the wheat market pretty close to unchanged, sugar up a fraction, the dollar slightly lower. These markets are basically still getting over Columbus Day yesterday. A lot of reports put off. We saw the crop condition reports come in today, and there's nothing surprising in them. Most of the crops are slightly behind on harvest, but they've dried out in many areas of the country too. So one part offsets the other. The big report's going to be Thursday morning when we get the supply-demand report. That'll give us an idea of what we really are looking at in world supplies, U.S. supplies, what the yields look like in bushels per acre. So that's where I think the market is really going to look. Today was not a day that had much in the agriculture market. It was a day more active in the financials, but I'll get to those in the financial and metal update. On the soybean market, as you can see, we're just about going sideways here right now. For the week, we're down 6 cents, but nothing real big occurring one way or the other. I still view the market as having been in this upthrust from 55 and a quarter to 72 and a quarter, and it's backing off a little as we get into the report. As I mentioned yesterday, some of the areas that people will look at, did we make our lows in September or August or further back? A lot of people look at these markets and often think that we have lows in place by the beginning of October recently. We'll see if that's the case or not after the reports. I see no point in second guessing it. In terms of the swing line, it tells you that you're not trending. You've got a higher high and a lower low. When I put on the 18-day average of closes in red, you're right at that number, and you've been hitting it now 4 days in a row. If you slip a little from here, next support's the 100-day average of closes in green. The Bollinger Bands, and I pointed this out, I think, for you this past 4 or 5 days, they are narrowing in. And as they narrow in these black lines, remember, the goal of them as an algorithm is to keep the market trading within them 95% of the time. Well, eventually they have to break out of them. And the longer the market can go sideways in them, the more power it develops and eventually breaks out one way or the other. You were doing that back here. Do you see that sideways action? And eventually you came out to the upside. So the longer this goes, and this has got a reasonable amount of time to it, often the bigger the move out of the band. Now we're waiting to see which way. Is there an inkling here? There really isn't any way you cut it. Even momentum has gone flat in the market. So we have markets with not a lot of volatility, marking time for some event. I don't know what that event is. In the meal market, as I said, I thought we peaked out actually last Friday when we hit the upper Bollinger Band. You went through it on Monday, and today you're backing off again. Again here, momentum is flat. You have a narrowing Bollinger Band. Unlike the soybean market, you are in an uptrend with higher lows, higher highs. But even if you were to take out 309.80 and start down, 308's the bottom of the Bollinger Band. Unless you're going to break out one way or the other, you wait. Now, could it break out after we get Thursday's report? You betcha. But until then, my doubts about it are, why would people take big positions till they get some numbers? In the soybean oil, you can see the pattern of lower highs, but suddenly you have higher lows. That is a market that's doing this. It's narrowing in just like that. It lost its embedded reading, which often leads to a challenge of the 18-day average, but the longer that takes, the more bearish the market is because it's struggling to get up to that number. In addition, you had a bearish crossover where the 18-day average got under the 100. I'm going to view the chart as one waiting for an event. In the corn market, you are fighting at the 18-day average, and you have been since the very beginning of September. And yes, the market has had occasions where it's hit the lower Bollinger Band. You'll notice it hasn't hit the upper one. The market is not what I'd call trending. It's got a higher high and a lower low. And if we look at the momentum, you have a reading here of 28.6. I view anything under 30 as being oversold. In the wheat market, you're trying the lower side of the Bollinger Bands, and you've got a downtrend that is oversold. Will the market be able to break out of this narrowness and trend to the downside is the big question. Why do I say downside? Because at this point, you'd have to get back over 445 3/4 in order to negate the downtrend. It is trying to push the market down, not up. In the sugar market, you're void of a trend. You've got flat momentum in an area here that is still oversold. Number two, you've got a market with a higher high and a lower low. It's certainly not a trend, and it's trying to make a run back to the 18-day average for neutrality to figure out what to do with itself. In the coffee market, when we lost the embedded reading right here, this is like soybean oil, but look at how much faster it happens. You lose the reading, you had been embedded. What does embedded mean? It means that the two numbers that make up slow stochastic, formally they're called a K line in red, a D line. Why? It's beyond me, and I knew the man that created this. I have no idea. He had some crazy way of doing it that I never did understand. He was right, and he gave me all the names, but it doesn't matter. I understood the concept, and that to me is more important than anything. And as I looked at it, I saw how the market embedded reading, you lose it. When you lose it, unless you get it back with that red line falling immediately back under 20 the next day, the odds favor price and the 18-day average are going to try to come together. Just missed it, but clearly hits it right there, and it's stalled out. That's all that I look for. There's no trend. You got a lower low and a higher high. If it continues up, resistance to 100-day average. When a market loses in embedded slow stochastic that's bearish, the first thing it does is it gets oversold. And you correct that by getting a rally in the market or developing sideways to upside bias. In the cocoa market, the market fell back to the 18-day average after it attempted its embedded reading. It's now looking for direction. The trend is down because you got lower highs, lower lows. That is countered by the market staying over the 18-day average, and momentum in this case is overbought. It was embedded, now it's overbought. Remember what I said, to convert you got to go through that step. In the cotton market, focus on the sideways embedded readings. That's where this market's caught. Momentum is up and bias is up because you're over the 18-day average, but you have a pattern of what now? Well, 69.97 was not taken out today. So you had a higher high and a lower low, and now you're trying to create higher lows in the market. I'd like to see that 69.97. I could make the argument that you have the higher lows and the higher high. I'd prefer to just keep it this way as it's trading sideways, but I definitely have an upside bias, not a downside right now. In the cattle market, right up to and over the upper Bollinger Band. That's the first step in trying to go further up. However, because you weren't going sideways, whether it can stay there in an overbought condition, that becomes the market's dilemma. Feeder cattle overbought in an uptrend. I'm looking for resistance at the upper Bollinger Band. In the hog market, higher lows, higher highs, an overbought market. Notice both numbers are over 70 but not over 80. That's what I call overbought. Trend clearly up. Take out 60-60, and I'm not even looking for that much downside. Clearly, the 100-day average is acting as more of a pivot than the 18 at this point in time. So you put it together, you try to come up with ideas, and our good friends at Consensus, which is an online publication of market news and analysis by a ton of brokerage firms. This just gives you an idea of some of the names that are there. That's just one of them. It keeps going. I mean, there's name after name. You probably recognize a lot of them. They have their writers write in different markets, and as they do so, Consensus compiles the letter. You can read them on their website, and in addition, it publishes what it calls a bullish sentiment index. Could it be bearish? Yeah. It just isn't all that bullish then. It explains how it works, how it takes the market letters, and gives you another way of looking at market momentum, or at least what the writers think it might be. How do you get it for a 4-week trial? You can call us. You can go to our website. You'll see a carousel of free offers. It'll be in one of the offerings. You can click up here if you're watching me on YouTube, or underneath us it says click here for Ira's free offers. Do so, and away you go. I'm Ira Epstein. You have a good day.